What's up, everybody? Welcome back to another episode of our Closing the Deal podcast. I am your host, Sam Enright, and sitting across from me is my host, our co-host, Zach Dixon. Zach, what's going on? How are you?
I am doing very well this morning. How are you doing today, Sam?
I am doing well. Beautiful day.
Is it? Did you get
It
outside this
is.
morning, get your ruck in?
No,
No,
not yet. That's for this afternoon. Got to warm
okay.
up a little bit.
For sure, for sure. Today's supposed to be a warmer one in context to what we've had this last week. So hopefully you get some decent weather to get out there, to get outside and get that ruck in.
Yeah, it looked like it was going to be like 30 degrees, but sun shining. So,
That's a heat wave.
yeah, can't complain. Can't complain. So, as long as the snow starts to melt, we'll be good with that.
That's how I'm feeling about moving next week. I really just want to make sure that we have at least the sun shining. Like if it's in the 40s, if it's in the 30s, that's fine. But I just want the sun shining because that makes a whole world of difference on the real feel is when that sun is out and no wind. But that's probably too much to ask for. So
Oh, you're moving next week, huh?
I am indeed. I am indeed.
Why don't you tell our viewership what's going down with that?
Yeah. So closing on our new home in Newark on next Monday. So super excited about that. Had about a 60-day contract period just due to our prior housing commitments, and so yeah, it's been a pretty long process, but we're super excited to get into our new home, get moved in, get all of the fun things for a buyer when they buy our new home, get those done. We're actually already planning on getting in there and painting the living room a whole new color. So that's one of the first things that we're doing when we get in there, and kind of go from there. But overall, just super excited. Got a good little deal on the property, and had a good successful time with negotiations as well. So all in all, can't be too upset with it at all.
Awesome. Love to hear it. Heard you had a great lender experience as well.
I
Heard it was through
didn't.
the roof.
I did indeed. I ironically, I surrounded myself with a very good team.
Oh, yeah, that's a key. That's a good key. Actually, that brings us to our podcast topic of the day, not how to surround yourself with the right team, but guys, we are further breaking down our How to Buy a Home series, and we're actually on part 5, oddly enough. It's crazy that we have already dropped 4 episodes and for this series, but this is actually going to be probably one of my favorite ones that we do, just because this is where the fun begins, in my opinion. This is where things start to take off, especially from the lender side of things, which, if you guys don't know, the part we are talking about is when you go into contract on a home. What does that look like? Things to expect from both sides of it. Obviously from your real estate agent side as well as your lender side. So I'm excited because this is when the real work begins for the lender. Once you do find that house, you go into contract. That's when we get to start our fun. So
Definitely, and everything that obviously to progress through the contract process and ultimately get to the closing, there are steps in this in contract process that we have to take care of and solidify. So once you get into contract and you're now starting to move on to these next pieces and next steps, that's when it kind of, I feel like, starts to become a little bit more real for you as a buyer, that you're closing on a new property, closing on a new home, when you're getting the inspection taken care of, when you're getting the appraisal taken care of, when you get your title commitment back, when you get your loan commitment back. All of those things are like actual milestones that you can cross off in the process that gets you one step closer to that closing table, and getting you into your new home. So it is super exciting, I think, on all sides, the agent side, the lender side, and especially on the buyer side. Just starting to check some of those things off the list that were on the to-do list.
yeah. No, absolutely. I mean, this is obviously, I said it, for us lenders, but this is when it becomes real for you, the client, as well. Cause depending on how your contract's structured, you're a good 30, 45 days away from, being in your new home. So it definitely starts to feel real. The jitters are there. And, the excitement starts to set in. So, but obviously we're excited to kind of walk you guys through this. The best part about what I think this home buying series is if you are out there buying a home currently, or if you've already purchased a home or thinking about it, obviously there's a little bit of everything in here for no matter where you are on the journey. You could be somebody who's already been pre-approved, and you're looking to see what happens once you do go into contract when you do find that house. I think that's what the cool part about this is you can just go down the list, and whatever episode is fitting where you're currently at, you can listen and obviously get some insights into what to expect. So I think that's a pretty cool feature of all this.
For sure. And just, specifically, we have clients that are at different steps of the process right now. We could share these videos with our clients, and they're applicable to what they're going through, in their actual contract, in their actual process, on this specific day or whatever it is. So it's all stuff that is very, very much applicable to what the process is doing, on the back end, on the front end, in that 30 to 45-day process. So a lot of good information here for sure.
Yeah, absolutely. Well, Zach, do you want to get us started? Just kind of kick us off in the first part of this, which is contract acceptance, because obviously, you being the real estate agent, in the last episode you talked about, structuring an offer, making an offer, what that looks like for them. So, now that the offer's been accepted, kind of walk them through, what that looks like when you get that call or you get that email from the listing agent that says, "Hey, we're going to go with your guys' offer."
Number one, the biggest feeling is going to be excitement for sure. The phone call to tell a buyer that they're in contract versus that their offer did not get accepted is day and night on my side of things, and especially for a buyer as well. That's super exciting when a seller chooses your offer to move forward with. That obviously means that we did something right within that offer. So number one feeling is always going to be excitement, getting that phone call, getting that email, getting to pass that along to our buyers. Because obviously I touched on it a little bit in the last episode, but making the offer, all of the pieces that go into that. There's just a lot of moving pieces, and it can feel a little bit stressful and feel like maybe you left something on the table when you sent the offer in. And so when you finally do get that acceptance, it's just a lot of different feelings, but mostly excitement for sure. But once we get that offer, we're going to get that purchase contract in full sent over to our lender. And at that point, obviously, you're going to get started on your side of things. But then on our side of things, we're likely going to immediately get started with the scheduling the home inspection. That's going to be really the first thing we can check off the to-do list once we get into contract. Usually that's going to occur, a couple of days after acceptance. You usually have a 7 to 10 day window after your acceptance to get those inspections completed. So that's going to be how we get started on my side of things. Can you tell us a little bit what goes on once you get that purchase contract in hand, and what goes on the lender side of things?
Yeah, yeah, absolutely. Obviously, when you get the contract accepted, like you said, there's a lot of excitement. So the first question is, financing, 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 what's that going to look like for us? So, typically, we'll get a contract sent over. Sometimes the borrower contacts us, say, obviously, hey, just want to let contract's been accepted. We'll start with the congratulations from there, and then, wait to get that contract over, fully signed from the agents. That way we can begin working on things. You know, things for us start basically with a disclosure package and collecting of borrower documents. So I know we talked about this in the pre-approval part of the process. Typically we will request some documentation up front, pay stubs, income, W-2s, things like that. But there are a couple other things that we typically will collect once you do go into contract, things such as, your driver's license, bank statements, and then updated pay stubs if that's, applicable. If it's been a while since, we originally pulled those documents, those are things we'll get requested to get started on the process. And then the next thing is going to be your disclosures. Basically, your disclosures is an entire package of documentation that you sign for the loan. This is a common thing that we hear. If you sign the disclosures, does this mean you're locked in? That is not the case. No, it's just us as the lender, we have to have documentation basically stating that you have agreed to move forward with this financing, that you agree that, we can do all the necessary things that we need to do on our end while staying in compliance. So, there's things like acknowledgement of intent to proceed in there, which is basically you saying that you acknowledge that you have indeed applied for this loan and that you are agreeing to move forward with everything. And then there's just going to be tons of information in there, just different things. You're going to get like a loan estimate, you're going to sign your loan application. There's just it's a lot of documents. I'm not going to lie to you. So, but again, it's just, to get the process started, we have to have things in writing stating that you agree that you did apply for this loan and you are ready to move forward with the process. So, we try to get those out within at least the first 72 hours of obtaining a contract. It just honestly does depend on the client themselves. We've had clients that have taken a little bit more time with documentation. We've had clients that are fast. So really, a 72-hour window is really where we try to operate on. But we've gotten them out as quick as 24 hours within getting the contract. It really just depends on you, the person, and how quickly things are looking to move. So, if you have a little bit of extra time, let's say you wrote a 45-day contract, in Zach's case, we did wait a little bit in order to get those disclosures sent out, in order to get the process rolling, but we had some extra time, that we could spend that. So it wasn't a huge deal. So it really is a case by case basis, but obviously we are always trying to be as quick and efficient for our clients as possible. So I would say 72 hours is a good golden rule. Like Zach said, you guys start with the home inspection on that. Quickly after that is going to be appraisal. Once you sign your disclosures, once you sign your intent to proceed with the loan, we're going to send out a document that is collecting payment for an appraisal. That's going to be sent out. You guys will fill that out, and then we'll collect payment for the appraisal. The disclosures have to be signed in the mortgage business. You have to have those disclosures signed before we can collect any funds, before we can move forward with anything. So that's always going to be step one. And then the appraisal is going to come right after. Zach, it's probably a good timeline for us as well. Within the first 7 days of getting the contract, we're typically going to order the appraisal. So I guess that's probably where we want to just take 1 second, just say that is one really fast part of this that sometimes clients don't understand. I've heard them say that, like, oh my gosh, we were not expecting the home inspection to come so fast. We were not expecting the appraisal money to be due so fast. So if you are going into contract, just be aware that those are two things that come very quickly after going into contract. You are going to be expected to get a home inspection, and you are going to be expected to pay for your appraisal up front. So just again, be aware of that. But yeah, that's kind of how our process starts. We'll get the disclosures out, we'll get everything signed. As soon as we get that, we'll collect payment for the appraisal and we'll get that ordered. Typical appraisal process for us is roughly 7 to 10 days, not business days, like actual days. So I mean, if we order it on a Monday, that next Wednesday, sometime in between that next Monday to Wednesday, we'll typically have it back. So it is a pretty quick process to get that, but that's one of the biggest pieces of the entire puzzle for us, the lender, is the appraisal, making sure the value is there and making sure there's no repairs or anything that are needed.
So talking about a little bit more about the home inspection as a whole, and kind of picking back off of the cost, like you mentioned as well, Sam, that is going to be an upfront cost as well, the inspection, in addition to, like you mentioned, the home appraisal. That's going to be very quickly upfront on that 7-day process. To be able to view the inspection report, most inspection companies are going to require that payment in full prior to you being able to view the report. So that is another cost. Both of those costs are something that are going to be pretty quickly in the process. Usually all in all, around $1,000, give or take. And something else that we've covered in a previous episode as well of costs of buying a home, but give or take around $1,000 for both of those costs. So moving on, after you receive that inspection report back, depending on how you wrote your contract, most likely you wrote it with a request to remedy period. So after that 7-day inspection period, you're going to have a 3-day period to request the seller to fix anything that comes back on that inspection report that you feel necessary. So 90% of the things that show up on inspection reports are very, very simple fixes, $50, $100 repairs. So when we're focused on the request to remedy, we are going to be focused on the big ticket items that show up on that inspection report, safety issues, things of that nature that need to be repaired prior to closing. And so, like I mentioned before in a previous episode, this is just a second negotiation period for you as a home buyer to negotiate fixes, to negotiate a purchase price discount, or to negotiate seller paid concessions or seller paid closing costs in lieu of having those repairs done. So This is all in all, the inspection request to remedy period is going to be about a 10 to 14 day process as soon as you go into contract. And we do this up front to ensure that there are any problems. If there are any problems with the property, these are taken care of up front and to begin with. So we're not wasting time for the home seller on a property or with a buyer that may not be closing. And so after the request to remedy period, what you're going to have is depending on how you wrote your contract, is you're going to be submitting your earnest money deposit at that point. This is usually 1 to 3% of your sales price, depending on the sales price. If it's not a gigantic amount, usually $1,000 will suffice on that as well. But think of it as a good faith deposit to show your seller that you are serious. You have a little bit more of your own skin in the game. And then at the end, when you close on your property, this $1,000 gets applied back to your cash to close, cash required to close. So, just a heads up, obviously, when you go into contract, you are going to have some costs right away, within that 2 week period. And so it's just best practice to know what those are, be prepared for those ahead of time, and know how those affect you as a home buyer as well. And so, yeah, moving on from that, after the earnest money is deposited, we are really focused on the title and obviously lending as well. So, do you have anything that you want to add on the title side? How does that get ordered?
Yeah, and actually, I wanted to add something there as well in just regards to the home inspection. So, typically, as a lender, we will wait until that home inspection comes back to order the appraisal. I did forget to mention that. So, while that is a fee that does come up pretty quick, the appraisal, we do typically, because as just a courtesy to you, the buyer, we will wait to order that because again, we don't want you on the hook for two reports. If your home inspection comes back and the seller's not willing to play ball on things that you desperately want done in order to buy the house, and you decide to walk away, it'd be really it'd be really unfortunate of us to charge you for that appraisal, for nothing. So we will typically wait on that. Usually, like Zach said, the home inspection, I mean, it's within the first couple of days. So I mean, we don't lose too much time, but just wanted to add that in there. That way you guys are not under the assumption that it's going to be, two costs. And well, what happens if I walk away because of the home inspection? Do I not get my appraisal money back? Typically we will wait in order to ensure that you do get that money. So,
And
and then
we
as for type, go
Yep,
ahead.
sorry. We and also it depends on the timeline of the closing as well. If you have a 35-day closing due to seller necessity, obviously those things are going to move a little bit quicker to begin with. If you have a 60-day closing due to something that is in your personal situation, obviously we're going to kind of tailor those timelines around that as well. So it all really just depends on how long your entire process is going to be as a whole, when your closing date is, and if that is a necessity on that day, or if you can maybe close early or close later. It really just depends on when your closing date is, and we'll kind of work all of those other deadlines around that.
Yeah. Yep, absolutely. And then getting into the title side of things, yes. So we will always place a title order as the lender. Basically, we send over your guys' information. We'll send over our loan amount, what type of loan we're using, those sort of things. And then we will send over the purchase contract as well. Most typically, I do believe the listing agent, the buyer's agent, they'll usually get a copy of that stuff over to the title company to begin with. Because again, I know we've touched on this in other episodes, but most typically the seller is going to choose who is the title company. And if they don't, then they'll leave it up, they'll say whatever. And then you, the buyer, can choose. Or if you guys don't care, you leave it up to the lender. Sometimes, we have some common title companies we work with, but, we'll get all that stuff sent over, make sure they have the contract. That way they can go through it, get everything that they need from it. And so that starts their period, which most typically I would say title work takes anywhere between 10 to 14 days, just depending how backed up the searcher is, and all kinds of different things. Obviously, if you're in a holiday season and you have buildings closed, like county records, those sort of things, it's going to take longer. So just take those things into account. But most typically, they're going to have title work back anywhere between 10 to 14 days after the initial order is placed, which, we usually get the order placed within, again, 72 hours of getting that initial contract.
And picking back off that a little bit, some of these courthouses are into the 2020s with documents, and everything is available online, so examiners can do everything online. But depending on the county that you're purchasing in, some counties are not all online, so these examiners have to physically go to the courthouse of that specific county, pull the records physically, read through them all. So it can be a little bit more of a tedious process, just depending on the location of which you're buying as well. Franklin County is one that all records are online. Lincoln County is one as well, but there are some counties where the examiners literally have to walk in, sign in on the sign-in sheet, pull the physical files, read everything, and that's obviously a lot more tedious and time-consuming than what it would be if they could just hop on their computer and read through all of the documents there. So
Yeah. Yeah, absolutely.
so moving on, what after we get that title ordered, what is going to happen with underwriting and the loan process? How does that all work?
Yeah, so once title's been ordered, we're going to move the milestone of the loan to our processing milestone. So we have a process. Well, every lender or every loan officer in our company has a different processor, but we actually have a processor that we work with. She's awesome. Basically, what a processor is going to do is they're like a pre-underwriter. So they're going to go through and they're going to make sure all the documentation that we need is there. So I already kind of touched on it a little bit. The four key pieces of documentation that you need for every loan in order to get it submitted: you're going to need a driver's license, you're going to need bank statements, you're going to need W-2s, and you're going to need pay stubs. If you're a self-employed borrower, then you're going to need tax returns instead of the pay stubs and the W-2s. And then if you are going USDA, they require tax returns as well. So that would be a fifth piece of documentation for that. But those are the core documents that we always want in every file before we submit it to the underwriter. And so what the processor is going to do is there's a couple of things that, we do on the lending side. We pull, what's called a fraud report, which is basically just a 30-page report that double checks every name that has to do with the file. So, they'll make sure that there's nobody on a certain list, such as lender, title company, agents, buyer, seller, anybody that's, barred from doing business in real estate, those sort of things. And then they'll just double check that all the information that we have is correct. This is sort of a report that pops up. If you own property and did not disclose to us that you own property, this is where something like that would come up. If you are, it'll, basically search the databases to find any record of, what's going on. And it looks up employment history, make sure your social security number matches what you've provided, making sure essentially you are who you say you are. You are the person who applied for this loan. They'll go through and just, it's a lot of clerical stuff on the back end. They make sure everything is good. They'll pull like a flood cert, make sure the property's not in a flood zone. And again, they just make sure that, most of the things are in place where they need to be. They'll double check the loan officer, make sure that the income was calculated correctly, make sure, if they can see anything that the underwriter may want, then that's something that they can go ahead and start working on those things. So again, it's just a pre-underwrite sort of situation where we try to do our best to get everything in order. That way, when the underwriter reviews it, they have a lot less work to go through. We try to make our files as clean as possible. That way it all makes sense when the underwriter gets to look through it. So processing is typically a 24-hour, sometimes 48, I guess, just depending on how busy we are. But it's usually a 24-hour process. Get it submitted over to the processor, and she'll have it submitted to the underwriter within the next day. And again, she'll send any notes, anything that she noticed in the file that we may need, and just kind of give the loan officer just a general heads up of, hey, this is what I did. Here's what I found. You can go ahead and start working on these things or request them from the borrower if you would like. So that's kind of the processing side of things. And then it does get submitted to the underwriter. And once it goes to the underwriter, our company is pretty good about underwriting. Typically we are 24 to 48 hours on that as well. It just, there have been times where we've gotten a little bit bogged down and a lot of loans come in. And so, you run 72, 96, those sort of things. But for the most part, we're within 1 to 2 days. And again, the underwriter is just going to go through, basically, they're going to look at the AUS system. I know we talked about that in the pre-approval part of this series. There's an automated underwriting system, which basically you throw the entire loan into it. It does an electronic review of the loan, make sure that you can get an approval on that. And then there's a list of conditions that have to be met in order for that loan to be closed. And so the underwriter is going to go through, they're going to verify all those conditions. They're going to look and see, what do we already have? What do we need? So that's kind of their job. They make sure they review all the loan guidelines, make sure that we are compliant with everything, make sure that we're getting everything that the loan programs state that we need, and so on and so forth. And then they'll usually give us what's called a conditional approval. And this approval will basically say this loan will be approved once these lists of conditions are met. And kind of that's kind of the process, really. I mean, from an underwriting perspective, I mean, that's what happens. And so we get the conditional approval out, and then we start working on those things. So
What are some examples of conditions that come back on that conditional approval?
things you're going to always really see, unless somehow you got like an appraisal waiver on the property, you're always going to see appraisal conditions. So, there's different things you have to have in the appraisal itself. You have to have an appraisal cert, which is like basically a certification saying that you sent a copy of the appraisal to the borrower. There's electronic appraisal conditions that have to be met. Each loan has a way, not each loan, FHA and conventional, you have to throw the appraisal into an automated system that reviews it, make sure there's no major issues with it. And then you'll see title conditions on there, and then really any borrower related conditions that we need. So any sort of letters of explanation, these can be things like if you have credit inquiries on your credit report. They want to make sure that no new accounts were open that are not, reporting on the credit report. It could be things such as, your driver's license address doesn't match your current home address. So letter of explanation for that. There's income verification. So if the underwriter needs further verification of your income, they'll request for us to go to your employer and verify that and get that back for them. And then really it's a bunch. After those sort of things, it becomes a little bit of nuance, and it just depends on what situation you're in. Do you own properties? If you own properties, we have to verify those properties are owned free and clear. If they're not owned free and clear, we have to document the mortgages on them, make sure you haven't been late anytime in the last 12 months. So it's a case by case situation, but those are just kind of a little bit of an insight as to what you'll typically see on a conditional approval. And obviously, the more things that you have going on with your file, the more conditions there's going to be.
So you named off a lot of different things there, but generally speaking, I feel like when you get that conditional approval, it is pretty close to a full approval. I should like emphasis on pretty close. Like you still have work to do, but all the things that you named off right there are rather simple, for the most part, things that can be taken care of really quickly by the borrower, by the agent, by the lender, just things that can be taken care of pretty quickly. So I would say that when you get that back, you're on a good path. That's a good sign
Yeah.
for sure.
Yeah, absolutely. I mean, obviously you want to see that, because we have had files that have come out and been suspended, which means they're not approved, and we have to get these things documented in order to get it even into the conditional approval phase. So, it just depends. And this goes back to the pre-approval part of the process. This is why we do what we do, is because the goal is to make the conditional approval basically, like Zach said, almost your full approval. We just have to meet, the typical stuff, appraisal, title, those sort of things. We want to do our due diligence in the beginning. That way we know that there's not going to be any surprises, because I know we've talked about this as well, but nothing's a secret in this business. So whether you think that you're going to be able to keep it from your lender or not, there's just so many things in place that doesn't happen anymore. And we can thank the housing market crash in 2008 for that, because they came out with a lot stricter guidelines and those sort of things. So everything is double checked, triple checked. Like it's going to be made sure that whatever information you're giving us is accurate. And so that's why we like to do the due diligence in the forefront, is to make sure that those surprises are few and far between when we do get to underwriting and those sort of things. Because again, nobody wants to hear, we've already talked about it, you're excited, you're in contract, you think you're going to buy this house, and if there's something you didn't mention to your lender and we didn't dig deep enough in the beginning to find it, and it comes up in underwriting, there's going to be a lot of unhappy people. Like that's just reality. And those are not fun phone calls to make. Those are not fun phone calls to have. And so it's important. It's important for us to double check that. So again, yes, that is why the work is done so heavily in the beginning, is to make sure that you avoid situations like that.
For sure. For sure. And if you guys want, just going back to the pre 2008 regulations, if you guys ever want a insight onto what that was like, obviously me and Sam were like 10 years old at that point or so. But if you guys will ever want an insight as to what that looked like prior to 2008, the movie The Big Short with Steve Carell is a fantastic, fantastic movie. Steve Carell is a Wall Street guy, Wall Street banker that realizes that the mortgage industry is overheated, overvalued, about 2 to 3 years prior to it happening. So it's a great movie. It's got Christian Bale in it as well. It's a great one, and it shows exactly how these lenders were operating prior to 2008. Really just handing out money to everybody and anybody. If you had a job, if sometimes even if you didn't have a job, if you wrote on the
Yep.
paper that you had a job, you could probably get a home loan for sure.
Yep.
So
Yeah, it's definitely crazy. So I mean, there's that stuff does not happen anymore. So yeah, I would just say again, be upfront with your lender, be upfront with everybody involved, and that's again why we, I was just talking with an agent the other day, and he was like, we had a lead come across, and he's like, you need to make sure that the lead knows, that no agent is going to show them a house until they're pre-approved. It just doesn't happen anymore. And those are one of the largest. It's not just, you know, I guess maybe even can you afford it? It's even a little bit deeper than that. Is there going to be issues if you do go into contract on this house? You know what I mean? And so just because you believe you may be able to afford it, and you might, are there any skeletons in your closet that maybe you're not even aware of? I mean, you would be surprised the number of people that we talk to that have things on their credit, or things in their history that they thought went away, or and then it comes up and it's like, hey, what about, oh well, that was 10 years ago, or that was 8 years ago, I'd never even realized that, and I got this account that's reporting 90-day lates, and my credit's 600, and I thought it was 700, those sort of things. So that's why it's just get that stuff taken care of in the beginning.
makes for a lot easier of a process. That is for sure, for sure. Um, So moving on after that, now that we have our appraisal back, we have our title work back. What does the process look like now? Now that we have those two things in hand, those are committed, and everything looks good on all of those things.
Yeah, so our process here is, so basically you're going to get your loan back out of underwriting. The appraisal is already going to be ordered, title's going to be ordered. So our goal is always going to be whatever comes back on that conditional approval that is borrower related. Can we get all of that stuff uploaded into the file as quickly as we can to make sure that when the appraisal comes back, when we submit this loan back, because that's what happens when the appraisal comes back, we're going to review it. We're going to send it a copy to you. As long as everything says as is, those sort of things, we're going to put that file, or we're going to put the appraisal in the file and send it back to the underwriter to do a final review of the appraisal. Make sure everything's in order, make sure there's nothing that they're seeing with the comps, anything like that needs to be addressed. And so at that point in time, we always try to get as many borrower documents in there as possible. So when the underwriter's already in there to review the appraisal, they can review the other things, that we need to get taken care of. So, um, so yeah, we'll get that back. We'll send you a copy. We'll get it submitted back to the underwriter. At that point, we're hoping the files, like Zach said, kind of in that point where, we're feeling pretty good. We got everything, and we'll submit it back. Title work sometimes is in at this point. Sometimes it's not. So again, if it is, we get that. Title will send you a copy of the commitment yourself. They'll email you, give you that. So we need that commitment, and we'll submit that in for review as well. And so after all that's done, essentially what will happen is the underwriter will review everything, and they'll come back out with an updated conditional approval where everything that's been taken care of, he'll sign off on it, or he or she will sign off on it, and then they'll give us an updated list of whatever's left. So if there was any documents that we couldn't get in that are borrower related, obviously we would know, okay, we still have to do these things, so on and so forth. So that's typically, we hope by the time the appraisal comes back in, we have a pretty clean file coming back out where there's only a few minor things that we still have to get taken care of.
For sure. And at that point, you're pretty much, at the point where you can get, closing scheduled once you get all those things wrapped up on that second conditional approval. If there is a second conditional approval, you're pretty much at the point where you're ready to get closed. So it's a super exciting time. And really that is those are the three costs that you're going to see throughout the process, the things that we touched on here. And then at the end, when you close, and we'll touch on it in the next episode as well, is that's going to be the time where you have to bring all of the other cash to close, to the closing table to get your property taken care of. So Yeah. Overall, it can be as long as a process as negotiated up front, or it can be as short as probably a 30-day process. I would say that's probably the shortest on the financing side that it could possibly be, is about a month. So it's really just dependent on your situation, the seller situation, how the contract was written, and just how quick that all of those things will happen on the back end. And you as a buyer are, I would say, 60 to 70% of that stuff you're not even going to be handling yourself. It's going to be stuff that, your agent's taking care of, your lender's taking care of, and the title company's taking care of on the back end. You're probably only going to hear about it if there's an issue, if there's something that you personally need to provide or need to do to fix something. So, again, that just kind of goes back to our first episode, surrounding yourself with the right team in this series, just making sure that this process is going as smooth as possible for you once you go into contract, because you have the right team around you, because you did the pre-approval process correctly, because we, did the house hunt correctly, and lastly, because we wrote our offer how we needed to make sure that it benefited you as best as possible. So all of these things, go hand in hand, play a part to getting you to that very last step of closing, which we will be, talking about on our next episode. So, do you think there's anything that we missed here in this one on the in contract, or anything else that you want to maybe touch on for the next episode for our listeners?
I mean, ultimately, I know that we kind of just flew through that a little bit, as it pertains to like a conditional approval, and I'm sure when listening, the process sounds relatively easy, and there are times where it is. I'm not going to say that there's not, but I would just say ultimately, the process can be as hard or as easy as ultimately you, the buyer, want it to be. And I'm just going to be, I guess, maybe upfront about that. So we have clients that we've worked with that when we get documentation, they will, when we need documentation, sometimes they will fight with us, they will argue with us, they will question us, they will say, why do we need this? This doesn't make any sense. And while I do appreciate, obviously, being able to, I can explain to those people, I can definitely do all of those things. But again, I don't write the loan guidelines. Case and Home Loans doesn't write the loan guidelines. No matter what mortgage company you go with, they do not write the loan guidelines. Those are preset by Fannie Freddie, FHA, USDA, VA. And so we just have noticed that at times, if the transaction's a little bit harder, it's usually because there's a little bit of pushback about some things that it's just ultimately it's what it calls for. So we've had people that have gotten every piece of documentation and never said a word, and they get it within 24 hours, and those loans are always the ones that go the fastest and always the ones that get closed, because again, it's up to your personal, how quickly you want to get it done. And ultimately, there are some things, again, I'm not saying don't ask your lender questions, I'm not saying do everything, and that's not what I'm saying. I guess what I'm ultimately trying to get across is that if you fight the process, it's going to take you more time and it's going to be more aggravating. And unfortunately, this is just the day and age we live in. We, do not lend, the banks do not lend money without, they always say they're going to want your firstborn son, in part of the transaction. And ultimately, some people walk away from this and they'll say, holy crap, that was a lot of stuff that I had to provide. Like, and ultimately sometimes it can be, yes, but it's all relatively necessary if you want to go with a traditional financing. So I would just say, I know I jotted through a lot of things, and I'm sure I made it sound pretty easy, and there are times where it is easy, but there are deals where it can be a little bit of a struggle. There's deals where there's a lot going on, and the loan is not as straightforward as it can be, and those are the type of clients that we fight for. We fight to get you to the closing table. We fight to make it work. It's just, you guys got to, be willing to fight with us is ultimately the thing. So I would say that. And then the other thing I would just say is there are lull periods. I know sometimes people can go in with the expectation that they're going to hear from their lender every single day or those sort of things. Now, I do believe there's enough moving in a transaction where you should hear from your lender at least once or twice a week. Like, you should never go 3 weeks or 2 weeks without hearing from your lender. But there are going to be times, when the appraisal's ordered and the loan's submitted, if the underwriting is 3 days behind, there's going to be 3 days or you're not going to hear anything. There's just nothing going on. The underwriter hasn't lifted the file. The appraisal's not in. So it's just, it's a waiting game. So I would just say that as well, caution that a little bit, because I know that's usually something we hear from clients is, what's going on? I haven't heard anything. And that's not always necessarily a bad thing. It's just, there are parts of this transaction that take time to work through. So those are just the two caveats I would put in there about kind of this whole transaction. And yeah, like Zach said, once you get that, second approval sent through, you'll get your clear to close, and we'll cover what happens on the next episode once, your loan is clear to close and what to expect, from there.
And just reiterating as well, in those lull periods, if there is ever, if you ever have a question as a buyer, there's always open lines of communication with your team. Obviously, if the answer is there's no new update, that's better than hearing absolutely nothing at all. So again, if you have a question, reach out to your team directly, give them a call, shoot them a text. They're 100% going to get back with you and let you know either A, there's nothing going on, or B, there is something going on. So if you're ever in the process and you feel a little bit stressed about, maybe I haven't heard from so-and-so in a little bit, or I haven't heard, with an update on this or that, just pick up the phone and give them a call or shoot them a text. It's always open lines of communication no matter what. So, yeah.
Yep, absolutely. Definitely do that. If you have put yourself together with a good team, they're always going to be willing to help and chat with you, even if there is no update. Obviously, I just always want to make sure that people are aware of that. So I think that about wraps us. Zach, is there anything else you feel like we should have covered or we didn't cover?
Don't think so. Super excited to do the last episode in the series. The most exciting, obviously, getting to close and getting your keys and moving into your new home. So that's what this entire process is about, is to get to that final day and sign all those documents and hop in the car and drive into over to your new house. Hopefully, if you wrote it into your contract that you get possession at closing. So
yeah,
obviously something that we'll touch on in the next episode. But overall, just a super exciting day, and obviously we're going to convey that in our episode on the next one. So,
yep, for sure, definitely always a fun one for everybody. So I have said this is probably the most exciting for us, the lender, but that's probably actually the more exciting one for everybody involved, really. But obviously, we do love when clients go into contract, because that's when the work on our end begins. But closing is always a good time.
Yeah, you can't close without going into contract to begin with. So
no, yeah,
first step, got to have that done.
Absolutely. Well, guys, appreciate you all tuning in. Hopefully you found this episode valuable. If you're out there going through the process currently and kind of want to know what to expect, I would say this is probably mostly industry standard across the board. Obviously, sometimes you're not going to get the treatment that we were talking about in here if you work with certain people, but for the most part, yeah, this is what to expect when going into contract. So hope it helps everybody, and we'll catch you guys on the next one. So
absolutely, guys, thanks for tuning in. Feel free to give us a follow, give us a subscribe on YouTube. Again, appreciate all of your guys' feedback and support. So thanks for tuning into this one. We'll see you guys on the next episode.